Week 18 was all about central banks, with the ECB and Federal Reserve taking centre stage in delivering its next round of interest rate hikes. Is this the end of the hiking for the Federal Reserve for now? Well, the recent pressure on the banking sector suggests so, as US regional bank stocks are being hammered once again. It's crazy to think that there are still more hikes yet to filter through the economy. Is this going to create a fresh wave of risk-off trading this week? We shall see. Hello, I'm Connor Woods, one of the trading coaches at ForexSignals and howtotrade.com. Here is our weekly preview for the 8th to the 12th of May 2023. Now, it's safe to say that the pressure is really on the Federal Reserve to pause rate hikes amid lowering inflation and banking sector fears. This week's US CPI print will go a long way in determining whether Jerome Powell has the ammunition to do so. The report is due out on Wednesday, and investors would breathe a huge sigh of relief if inflation falls to the same place as last time, i.e. from 6% to 5%, can we get 5 to 4? However, focusing on the core figure will also be essential to determine how sticky underlying inflation is. There will be volatility in the UK too, as on Thursday not only does the UK release its GDP figures, but the Bank of England will also decide whether to raise interest rates from the current rate of 4.25% up further. And that's in order to combat double-digit inflation. There are sure to be plenty of opportunities this week, and let's check them out with our expert trading coach in the States, Shain Vernier.
Can you believe it's already the 19th trading week of 2023? Thus far this year, not much has happened. This week may change things, though. We have an epic CPI print coming out on Wednesday and several markets that are going to be in play. So let's go ahead and have a look, get on over to the charts. You see right here, we're going to start the week with the US 30. Monday is usually a very light day on an economic calendar. This week is no different. About only thing we can be watching on Monday is just that sentiment on the Wall Street Open, and we have the 3 and 6 month T-bill auctions. For me, I'm going to be keying on this US 30. Now, traders are still going to be pricing in last Friday's US NFP figure, so we could be in for some early volatility. A few numbers that I'm looking at specifically in the US 30. You can see I'm still very bullish this market. We're at that 2-year uptrend going from that COVID panic lows to those all-time highs, still well above 38% there, but we are closing in sort of in the vicinity of the yearly high thus far, which is at 34,515. So I think that we could potentially get a run there if it does look like traders believe those interest rate hikes are over from the Fed. So I'm watching this year's high very closely, 34.5-ish. I think that could come into play as being a potential breakout area to the bull, but right now still holding on to sort of a bullish bias here towards US large caps. All right, now Tuesday is going to be for the Australia 200. We have Australian retail sales that are due out, and this is an interesting type of a market because we have a steadfast classical chart pattern that is a staunch resistance zone, and it basically is a monthly quadruple top going back to August of 2021, and then going to January 2022, April of 2022, and then this year, February of 2023. You can see we've got really a quadruple top formation on the monthly. That's a long-term zone up there from 76.54 to 75.92. So in my view, that's a pretty interesting area for a potential sell. We're down around 72, but this can change dramatically. Remember, surprise rate hike out of the RBA last week. What will these retail sales figures do if they come in low? We're going to be thinking recession. If they come in sort of on point, or maybe in the positive side of the ledger, then perhaps some bids hit the market. So I'll be watching the monthly quadruple top. Right now, no real bias from an intraday perspective, probably looking at trading a rotational type of a strategy following the retail sales if we don't get that big move. So that's what's on tap for Tuesday. And then Wednesday is pretty much the Super Bowl of May already. It's very early, but we've had a Fed meeting, we've had NFP, we've got bank failures, and for me, US CPI on Wednesday is probably going to be I would say the last key event that's scheduled that could potentially send the US dollar directionally for May. We've seen a lot of compression throughout 2023 for the US dollar. This is a good look at your dollar index, and that's a bilateral rectangle. Now, what a bilateral chart pattern is one that could either break to the bull or to the bear. It doesn't suggest market market direction. It's just sort of a breakout zone. And that's exactly what we have here. You have a bilateral rectangle developing between 105.88 and 182. As you can see right now, we're definitely closer to the bottom side of that rectangle. I think that if we get established beneath that zone, beneath that 101 level, we could be coming off dramatically. And down there you have a 50-month moving average, which is right down around 97.98. So what could possibly send the US dollar down? That would be if CPI actually comes in better than expected. Our expectations, we're expecting it to really tick higher just a little bit. And just a quick look at a brief look at our expectations and consensus estimates. Core CPI month over month for April, 0.3% expected, 0.4 previous. So we're looking for it to come down. Core CPI down month over month. Year over year, core CPI 5.6% expected, 5.6 previous. So we're looking to hold serve there. CPI, this is a big one, month over month for April, 0.4% expected, 0.1 previous. That means CPI is expected to rise a bit. And then year over year, CPI 5.2% expected, 5.0 previous. So if we get a good looking CPI report, meaning inflation comes in lower than expected, consumer prices pull back, then perhaps we could get a break of this bilateral rectangle to the downside and maybe challenge 100, maybe even beneath 100, maybe down to that 99, 98 level, or maybe in that 50-month moving average, which is down at 97.98. So that's key. If we get a hotter than expected, then we're going to be talking about rate hikes and recessions and all that, and more than likely we're going to trade right back up into the center of this rectangle, more than likely up to around 102, 103, somewhere in that zone. So fascinating look at the DXY. I think that's going to be a tradable asset if you have CFD market access, or if you are trading the futures contract, which I believe is on ICE, the Intercontinental Exchange. All right, Thursday is going to be all about the Great Britain pound. We have the BOE getting involved with a major market moving event. At this point, the situation in the UK is definitely fascinating. You have huge inflation, upwards of, I believe it was 10% on the last reading, somewhere in that zone, real inflation. And then you also have a sort of an economic slowdown, so it's the worst of both worlds. Yet the BOE is expected to raise 25 basis points from 4.25 to 4.5. So that's an interesting dynamic. Now here's sort of the long-term view of the Great Britain pound USD. You've got that 2022's range. We had just a heck of a resistance zone right there at 62% of 2022's range, right around 124.59. We had a beautiful pullback buy last week that gave us a fantastic opportunity to get long. So right now, I'm sort of looking at a couple technical levels. 124.59, I think, to the downside is legitimate downside support, and then to the top side, this is a bit more ambitious, but up there around 130 flat. I think that you've got a little resistance zone right there, 78% of 2022's range, and you've also got that moving average, that 50-month moving average up there at 128.74. So that area between 128.75 and 130 flats more than likely going to set up as legitimate resistance if we do get that high. So sort of a broad look at the long-term metrics there for the Great Britain pound USD, but I think it's going to be a fantastic pair to be looking at on Thursday. Remember, BOE, we'll have BOE live for you here, so be sure to pop in and check it out in the trading room. Friday, the week wraps up with corn. Now, why do I have corn highlighted? Well, we've got the monthly WASDE report that's due to hit the news wires. I like the WASDE report because it can shake up agricultural markets. And if you're in Europe, or if you have CFD market access, that gives you a great opportunity to trade things like corn, soybeans, wheat. You can do a lot of different diversification strategies using those ag commodities. So the WASDE report is going to give you the current levels of supply and demand, both in the United States and globally, and that should really shake up these markets. And anytime there's volatility, we can trade it. Like I always say, if we have a pulse, we can trade it, and we're definitely going to have a pulse in corn. I think corn could be your big mover and shaker here because we're getting towards the end of planting season here in the United States for corn. So we're going to have estimates, planted acreage estimates. We're going to have some steadfast numbers there. We're also going to start talking about what the harvest is going to look like. Probably going to be mention of weather patterns there. We're supposedly shifting from a La Nina to an El Nino pattern here in the United States. That means that we're going to see some wet weather and potentially damper that corn output. All of these things, all of these market drivers can send corn directionally. So what does the technical look like? I'm looking at this low back here on the week of the 18th of July. This is a weekly chart for cash corn CFD, and you can see right here, this is a nice pronounced low. Low's down around 581 or so, and you can see we just had a proximity test of that last week towards the low at 590, and you've also got a nice 2-week break and then a bit of a retracement. So I'll be looking to probably get short with this most recent pressure unless we see this immediate extension to the downside. Then potentially we could buy right there from that spike low in this weekly. It's a big double bottom. zone, but you could definitely say that there's a support zone right down there around 580. So I'm looking at that closely. As far as the sell side, probably 6.25, maybe 6.5, 643. This zone up in here is premium shorting. You can see you've got that pronounced value area. You've got 657 at the top and 643 at the bottom. So that zone up there, if we get an opportunity, is probably going to be a pretty darn good short. So that's it really for the week. I mean, the big key event is CPI and core CPI figures on Wednesday. However, keep an eye on that breaking news feed. Bank failures are definitely the lead story in this financial environment. So we're watching the U.S. banking sector very, very closely, and also CPI is going to be big. And this WASDE report, if you care to trade some ags, that's going to be on tap for you Friday. All right, that's it from the Chart Lab here. Back to you, Connor.
The opportunities will come thick and fast this week, and it might be wise to scout US and UK markets for the biggest movers, given the US inflation report, the University of Michigan consumer sentiment, US PPI, Bank of England interest rate decision, and UK GDP as well. Either way though, our team of coaches will help guide you through these opportunities every single day in the trade room, ensuring high quality service as we cover all of the events for you in our live streams. We're also proudly producing streams covering the specific lessons in our brand new academy. So if you want to learn how to trade, or you want to learn more about the markets, our academy is the perfect place for you, and you can access that by visiting our website www.howtotrade.com. Until then, trade well, and we'll see you on our next live stream.